Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has continued to balance within a fairly narrow range. And if we look at the other markets, they haven't really broken out to the upside yet to join the S&P. So right now, this breakout to new all-time highs in the S&P is still in question. Heading into the open, we have support at 54 to 55 half, and we are going to use that area as the micro bull bear zone. So how the market responds to 54 to 55 half will give us an indication of which side is dominant right off the open. If we continue to hold above 54 to 55 half, then the buyers can maintain control on the smaller time frame, and from there we can head up into the previous close and previous VPOC at 58 half and 58.75, and then we have the initial resistance zone at 59 quarter to 61 quarter. Now, in order to break out beyond initial resistance, we have to see broad market strength and sustained upside momentum. So essentially in real time, we have to see conditions that are supportive of an upside breakout in order for that to take place. And then on the downside, in order for the market to put in a sustained breakdown below 54 to 55 half, we have to see broad market weakness, a bearish and downward trending advanced decline line, and sustained downside momentum via the tick holding below zero and printing some negative values. A breakdown below 54 would bring the 49.75 to 51.75 area into play. That marks the breakout area, and responsive buyers can be active on first test. But if we're seeing excess weakness in real time, then the market doesn't necessarily have to stop at initial support. So that's something that we will have to assess in real time. On first test, there can certainly be a response, and there is potential for a reversal, but that's something that we do have to gauge in real time. Below that, we have support at 47. We have Friday's RTH low at 44 quarter, followed by Friday's overnight low at 42 and an HVN 41 quarter. Now, in the event of a more extreme downside move, we could test the 41 quarter HVN, the 42 overnight low from last Friday, and that's a spot where you can get some larger time frame buyers to start stepping in. So 42, 41 quarter, 37 to 39 quarter, these are fairly high probability areas for buyers to step in, and we could get a decent response off of that area in the event that the market actually goes all the way down there. So we have to approach today with the understanding that the larger time frame bias is clearly bullish, given that the market recently broke out to a fresh all-time high. But right now the question is whether this breakout to new all-time highs is going to sustain. And in order for it to sustain, we need to see the other markets participating in this upside movement, and weakness in the other markets can drag the S&P down as well. And that's why we have to be a little more nimble and flexible with our real-time intraday bias. So off the open, as long as the market's holding above 54 to 55 half, we know that buyers can still maintain short-term control, and from there we have resistance at 59 quarter, 61 quarter, and in the event of a successful breakout, the 68 half to 70 half zone would come into play as an upside objective. But again, for that upward breakout to take place, we need an upward trending advanced decline line, the tick holding above zero, printing some nice values, at least around plus 5 to 600, and the other markets also participating in the upside move. And then a failure at pre-market support would bring the initial support zone into play and potentially some of the support levels below, but that's something that we will have to gauge and assess in real time. So those are the main ideas heading into the open. Let's see if the buy side can hold ES at 54 to 55 half, and we'll take it from there.